Hello and welcome to 5-Year Club video number 235. Tonight we're just going to go over something practical. FAANG stocks, F-A-A-N-G. What are they? They're certainly popular right now, and I'll do the hard work of reading this article. FAANG is an acronym for the market's 5 most popular and best performing tech stocks, namely Facebook, Apple, Amazon, Netflix, and Alphabet's Google. FAANG, so to be clear, Google changed its parent company's name from Google to Alphabet, but its search engine part, which makes all of the money. There are other things under Alphabet, such as the autonomous driving section of that. I guess it's a sub-company. I don't know what it's called, though. Anyway, the one that really makes money is Google underneath the Alphabet kind of umbrella. Anyway, FAANG was born out of the original acronym FANG, which did not have Apple included when CNBC's Jim Cramer coined the term. So apparently, Cramer just came up with some bullshit called FAANG. All right. Breaking down FAANG stocks, Facebook, Amazon, Apple, Netflix, and Alphabet are the 5 technology giants trading publicly in the market today as of 2017. Wall Street grouped these companies into one acronym to capture the collective impact that these companies have on the markets. As of March 20th, 2018, the market capitalization of these companies summed up to $472 billion, plus $760 billion, plus $888 billion, plus $136 billion, plus $757 billion equals to $3 trillion. In addition to the sizable worth of these 5 tech companies, their growth spurts have also seen the majority of the prominent money managers in the U.S. increase their stake in FAANG stocks for their funds. Funds like Berkshire, Soros, Renaissance, and many others added FAANGs to their portfolio as growth and momentum stocks, as revealed through the SEC Mandatory 13F filing in the first quarter of 2017. The growth of these companies can also be seen through their earnings, which have consistently increased year over year, securing their reputation as solid companies in which to invest. Each of the FAANG stocks trade on the NASDAQ, which is tracked by the S&P 500 index. Since the S&P 500 is a broad representation of the market, the movement of the market mirrors the movement of the index. Together, the FAANGs make up 1% of the S&P list, which has a total of 500 of the largest companies trading on the New York Stock Exchange and NASDAQ. The S&P market cap is the S&P market cap in total is 70 to 80% of the total U.S. stock market capitalization, and the FAANGs, by order of market cap, rank 4th, 3rd, 1st, 67th, and 9th and 10th on the index. Note that Alphabet's Google has 2 classes of shares trading on the public markets, hence the 9th and 10th ranking. This means that a collective up or down movement in these stock shares will lead to an increase or decrease in the S&P 500 index, and in turn a rise or fall in the market. Clearly, one can see how the FAANG stocks greatly influence the direction of the stock market. From 2014 to 2016, the year-end earnings generated by each of the 5 companies has steadily increased, save for Apple Incorporated's 14.43% fall in earnings from 2015 to 2016 owing to a drop in revenue, Apple's first revenue decline in 15 years. Is there a FAANG bubble? This is an important question because historically speaking, tech stocks tend to get in a bubble before other stocks. People get really excited about these new technologies. The valuation and spectacular performance of the FAANGs have been likened to that of the tech stocks before the 2000 dot-com burst, which saw a lot of overvalued tech companies crash, sending the global markets to a downward spiral. However, some analysts have noted that there is a difference between both tech classes, stating that there is plenty of room for the current tech class to grow as areas of cloud computing, social media, e-commerce, artificial intelligence, machine learning. It's interesting that they mention artificial intelligence separately from machine learning. And big data are still being explored and developed. All right. Well, you know what? That is the end of that article. The rest of the article is a sponsored piece of crap. So now you know what FAANG stocks are. Facebook, Apple, Amazon, Netflix, and Google. You know that they make up a sizable amount of the stock market. You know that people are very concerned that these stocks are in a bubble. What I tend to see is that there are like younger people, especially in the tech industry, who are trading on single stocks will often buy one of these stocks. And they definitely do it on kind of like a speculative play rather than a just long-term buy and hold play. If you buy an S&P 500 index fund, you will own all of these stocks as part of that index fund. I guess the one thing I'll say is that a huge amount of investing is not the future growth of the company as much as did you get a discount? Did you buy it for, did people think it was like worth like nothing? And so you bought it so cheap that even with average performance, you did extremely well because you bought the price so cheap. Over long periods of time, when you look at the best performing stocks, many of them are not glamorous. Many of them are boring and therefore undervalued, and that's why they were such profitable investments. These companies, Facebook, Amazon, Apple, Netflix, Google, they're in the news so often, it's really difficult to put them in that kind of category. They really, in the future, will just have to perform so shockingly well that they beat even all the hype that the media is going to put around them in these articles. And, historically, they're not able to beat the hype, historically speaking. Even though tech companies will return solid revenue numbers, they still cannot justify their price. They are bid up by people's excitement so quickly and so early that they are not good buys compared with other stocks, such as railroad stocks and Tootsie Rolls, which are really boring, but happen to be particularly good investments in the last 50 years. All right, well, that is it for 5 Year Club video number 235. I hope you enjoyed it. Have a fabulous evening.